Right, welcome back. You heard SEBI chief there outlining some of the key amendments to the SCRR on minimum public offer and timelines for minimum public shareholding. We have our guests with us, Mr. Subramanian and Mr. Parekh. Mr. Subramanian, if I could come to you first. New thresholds with regard to, the new norms with regard to minimum public offer and timelines, really. Now, I want to first ask you, maintaining SEBI's retail quota for large IPOs at 35%. Now, historically, this has meant that you will see a strong oversubscription as far as the retail segment is concerned. So the fact that the regulator has chosen to maintain this quota, do you see this trend of oversubscription, as far as the retail segment is concerned, likely to continue for the medium term? Mr. Subramanian.
Yeah, good afternoon, good evening. Definitely, I would think the oversubscription mania continues to happen because of the ASBA, which is firstly just a blockage of funds that retail investors have. And that is this we need to see how it will change should the markets sort of cool off a bit. Then how retail investors' participations in IPOs subscriptions change. That could happen not possibly this year because there are only 3 more months, but subsequent years.
Right. Mr. Parekh, if I could come to you next, what we are picking up, of course, via the press conference, very clear 4 thresholds that the regulator has outlined with regard to large IPOs itself, with varying market caps, attracting a whole different set of norms, as the case may be. What do you make of this? Your initial reactions before we get going?
Yes, I think the main trigger is, I think, the RBI requirement of large NBFCs needing to make a public offer. And, I think a lot of paper is going to come into the market. And I think based on, the kind of staggering numbers, I think it could have hit the market adversely. So I think SEBI's done a sensible thing in relaxing those norms. And it will also help in ease of doing business. It will kind of create a longer, it'll enable companies to come to the market without kind of a gun to its head, and so there will be a longer term. There will be a lot more paper. The markets will be deeper, and there'll be kind of less pressure to dilute very, very quickly.
Right. Without a gun to their heads, that of course is a key way of describing the issue. Mr. Subramanian, if I could come to you for a bit. I think the entire objective, as SEBI outlined a couple of times in the press conference, is to mainly ease out doing business insofar as the public markets here are concerned. Do you feel the new norms will make investing and doing business really as far as the public markets here a whole lot easier? Do you think that objective may well have been achieved or could well be achieved going forward?
Yeah, well, while this is not like some radical change or anything, but definitely SEBI has taken feedback from various stakeholders, be it brokerages, be it registered investment advisors, be it corporates for that matter, from a perspective of RPTs. So all these feedback and where people are seeking ease of doing business. So SEBI's sort of overarching theme across this board meeting has been to ensure reduce the compliance burden on these various market participants, be it brokers, be it mutual funds, be it corporates, be it registered investment advisors, etc. So all these dimensions have been covered from a perspective of where the industry or market participants have sought to reduce the compliance burden.
Right. I think reducing the compliance burden, no doubt, is on everybody's wish list insofar as easing out, doing business in India goes. Very quickly, Mr. Parekh, if I come back to you, the approval, or at least the proposal to approve capping mutual fund exit loads at 3%. That's of course the fee for early withdrawals. Protecting investor interests, that seems to be right atop the agenda. Does that also ring all the right signals, makes all the right noises insofar as putting investors first and protecting interests there, would you say, Mr. Parekh?
disconnected for a few seconds. So if you could just repeat yourself.
Mr. Subramanian, maybe I could take a question back to you. The approval to cap mutual funds, fund exit loads, the fee, of course, for early withdrawals at 3%, again protecting
These are
investor
small
interests. Do you
tweaks.
think that has been a priority for the regulator?
Yeah, if I could take the question, I think Sandeep has dropped off. Or so I think basically these are small tweaks where the exit load for mutual funds, especially when the size is very small, is been reduced to capped at 3% compared to 5% which was there before. These are small tweaks, of course. The idea is also to incentivize distribution to additional cities beyond the big 30 cities. So these all always help the mutual fund industry, which is obviously seeing greater acceptance across smaller towns across India, right? And so from that perspective, I think SEBI is just listening to various stakeholders, in this case, mutual fund investors.
Right. So there you go. Thank you so much for joining us, Mr. Parekh and Mr. Subramaniam, and for sharing those insights, on a day when the regulator has chosen to make a few tweaks, like our guest said, with regard to large IPOs, making tweaks there with regard to, amendments to the SCRR, both in terms of minimum public offers and timelines for minimum public shareholding. On that note, we'll have to slip into a special segment of ours. Keep staying tuned for what's next.